Welcome to the Sequire Spotlight. I'm Carmel Fisher, and you're joining us for our Q3 season of earnings. This is the roundup, and with me I have Chris Miglino from SRAX with the ticker SRAX. Welcome, Chris.
Hey, Carmel. Good to see you.
So welcome, Chris. Always great having this conversation with you. Just to get us started, please give us a recap on what SRAX is all about.
So the first thing I think I should mention is that SRAX is the owner of the Sequire platform. So, the company is actually doing this interview is owned by us. And so just so everybody knows that, I think that's important. But SRAX is in the business of helping public companies with a platform that we like to call an operating system for public companies that does a multitude of things that public companies need. It helps them manage all the different activities that take place within a public organization, all the way from understanding what's happening to their stock, understanding how to communicate with their shareholders, to be able to help them build websites around their shareholders, to help them implement tools that manage their employee options and their warrants, and a variety of other things that are essential for public company CEOs to have. And that product is called Sequire, and Sequire has grown significantly over the last few years. And we just keep building new and innovative products into the Sequire platform that just makes it more and more valuable for public company IR professionals and C-suite executives that need to manage everything that's happening within the organization.
Excellent. Sounds like a very robust and comprehensive solution. And also you touched on, the fact that SRAX had a very lucrative Q3 earnings report. Can you please touch on some of the major points in that earnings report?
Yeah, so one of the biggest things that happened for us recently is that we've deconsolidated our earnings with a group, another company that we own called BIGtoken. We spun that off into its own public company. It's on its own now, and their financials will now be deconsolidated from SRAX. We'll recognize our value of ownership in that business, which is now worth more than the market cap of SRAX itself as of today's recording. But over time, we'll be able to monetize that asset for our shareholders. But so we like to talk about our business as on an unconsolidated basis, because if you look at our business unconsolidated, that's really where the future of the business is. So we had an 809% year over year growth in the business, which is pretty substantial. We had a 46% growth quarter over quarter on its own. So we beat our, Q2 guidance, we beat Q3 guidance, and we gave an increase in our yearly guidance to $31.5 million for the year. So we're super excited about that. We've just continued to see an ongoing acceleration. We gave guidance for the fourth quarter of $10.1 million for revenue. So that's a growth that we continue to see ongoing, and that'll get us to hit our revenue goal of $31.5 million for the year. We anticipate that we'll give annual guidance for 2022 at the beginning of January, because we have really good insight into what the revenue is going to look like for next year, even at this point with existing contracts that have come in. So we have we're up to around 250 companies have signed up onto the Sequire platform. That's a substantial amount of data that we've aggregated on the Sequire platform itself.
So SRAX reported quite a substantial and significant increase in the quarter. Can you touch and give us some more highlights on what really was behind that?
Yeah, so we look at our numbers on a consolidated basis with a business that we just spun off into its own public company. So going forward from into the first in December 1st on, we'll no longer be consolidating the numbers of this other business that we had. That's called BIGtoken. Now, our ownership of that business is worth more than the value of SRAX today on paper, if you can believe that. But it doesn't mean it's going to stay there, but that's where it is today. But going forward, our business is everything is about Sequire, and the numbers that we'll talk about are all focused around the growth of Sequire. So we had a 283% growth of the Sequire business year over year. We had an 8% growth quarter over quarter. We gave guidance of $10.1 million for Q4, which will get us a yearly number of $31.5 million, which is at the top of the range. We had given guidance for 30 to 32, so we're hitting $31.5 million for the year. We've had 12 consecutive quarters of Sequire revenue growth, which is fantastic. We grew the subscriber base to around 250 companies that have signed up for Sequire platform. We had bookings in last quarter of $8.9 million, but as of the time that we did our Q3 report, we had $12.5 million in bookings at that time. And we had said that we're going to finish the quarter out with around $16.5 million in bookings for the quarter. So that's obviously the biggest quarter that we've ever had. Will be in the fourth quarter if we hit that goal of $16.5 million in bookings, which we think we'll get there. We're holding approximately, at the time of our Q3 report, we were holding around $29 million in marketable securities. So a lot of our clients pay us in stock, and we become partners with our clients in their business. And so we own around $29 million worth of marketable securities in our client companies. We had cash on hand of around $7 million. And, we know that we're able to have good insight into our revenue because a lot of our contracts are 12-month agreements, and those 12-month agreements give us good visibility into what's going on this next year. So the EBITDA of the business, like if you look at the EBITDA consolidated, it looks like we lost some money, but the loss is coming from the business that we just spun off. If you look at SRAX and Sequire on its own, we've had 3 consecutive quarters this year of positive EBITDA. So we're positive EBITDA for 3 quarters. We've had continued growth of customers for every single quarter this year. Last year we had revenues of around $1.6 million, and this year we had revenues of $7.5 million in Q3. I'm sorry, we had revenues last year in Q3 of $1.9 million. This year we have 7.5. We had an adjusted EBITDA of $940 this year versus a loss of $1.4 million last year. So we're getting to that critical point where where really every additional dollar that comes to the table is going to the bottom line.
100%. I love, and I'm quite intrigued by the fact that you partner with your clients on a very deep level, and to the point where you're actually taking stock as payment. What risks are inherent with that kind of model? And then, of course, what does SRAX do to make sure that it stays on the positive side of that?
So when we take stock from companies, depending on the size of the companies that they are, we have, in the smaller companies where there's more risk, we'll add resets into our agreements. So if the stock goes down, then the number of shares that we get if they did another financing at a lower level increases, so that our risk is mitigated on taking stock. So we enable our shareholders or our customers to pay us in stock, but we say to them, look, you don't have to pay us cash, but if your stock goes down in the future, you end up doing another financing, then that would have been where we would have been paid with stock anyway. So we have downside risk protection. And, you know, even if the small cap market ends up going down, and those companies need more money and need more financing, then our agreements call for us to be reset, and our price at which we get those shares are reset lower. So we're not necessarily losing money on those transactions. It's just that we would get reset if they raise more capital in the future, which many of the smaller clients end up doing. Many of the larger clients end up paying us in cash. And so that's not as relative for the bigger clients. But it is certainly relative for companies, that are, 5 billion and below, tend to like to pay us in stock.
Makes sense, especially during these times. With the new variant coming into play, do you foresee any slowdowns occurring for SRAX or Sequire as a whole in the near term?
No, I think that, our business really catapulted during COVID, and we saw a big increase in our business. Certainly we've built a virtual events platform, and all of our virtual events have done very well. We purchased LD Micro during that time frame, and the conference itself, saw a good adoption of the virtual side of things. Then we went into, a point where we were able to relaunch the physical conferences, and we did that. And so that seems to be doing really well. We had our first in-person conference this last in October, where we had around 1,000 people attended the event, and we had 12,000 people watch it online. So we did a kind of a hybrid event where we mixed these two things together, where we brought investors that are interested in small cap companies physically together, and then we had around 12,000 investors that watched those same presentations online. So we've definitely seen growth. We've certainly seen growth in our own shareholder ownership as well. We started last year with around 600,000 shares of institutional ownership, and we have now over 7 million shares worth of institutional ownership at this point. So the market has also started to buy us up a lot. We've had a lot more adoption from the market on the institutional side. So that's been fantastic for us.
Excellent, indeed. Just to kind of close off right before you give your final word on what takeaways you'd like our audience to walk away with, do you have any projections for the following quarter? And if you want to touch on the entire year, that'll be perfectly fine as well.
Yeah, so we gave guidance of this quarter for $10.1 million in revenue. We gave guidance for the year of $31.5 million. We unconsolidated and did our deal to get BIGtoken off of our books this quarter. So that's a big piece of our business. We launched a bunch of different products in Q4. We launched our platform that allows companies to launch their own websites. We've launched our short interest data. We launched our virtual IR assistant, which is a machine learning IR platform that companies can use. We launched our SMS platform, and we also, we had a record number of visitors to our microcap site. We own microcaps.com, and we've gotten around 200,000 unique visitors to that site on a monthly basis. So we just look to continue to expand the development of these products. We have, a lot of employees within the organization that are building some amazing technology. We're a very technology-centric company. We build stuff fast, quick, and our roadmap for 2022, as far as what we're going to deploy into the marketplace, is probably some of the most cutting-edge stuff that we've worked on. That's really going to take us, from just an IR stock related platform, really to more integrated into the organization, all the way from the CFO to marketing, also the IR teams. So we're excited about that into the Q4 and into 2022.
Wonderful. Where can our audience find more information?
So they can go to SRAX.com to find out more information about SRAX itself. This is SRAX.com. They can go to microcaps.com and become part of our community, which is a big piece of understanding our business. And if you are a public company and you want to learn more about it, you can go to Sequire.com, and Sequire.com will talk to you about becoming part of the Sequire platform.
Excellent. Thank you. Wonderful interview, and all the very best for 2022.
All right, Carmel, thanks a lot. I appreciate it.
Thanks, Chris. Of course. Bye.